Good morning. I know it's been a while, but I'll be making a video on what I would like to see happen this coming week and what has happened in the last week. So here we have the dollar index on the yearly time frame. I'm starting here to remind us on what I was looking for prior to the move that's happening right now. So we have this bullish fair value gap here on the yearly time frame. I had that as my draw on liquidity because I was expecting the low of year to be created within this area and then a continuation to the upside later in the year. And it's still in my crosshairs. I'm still paying attention to it. But as of right now, short term, we may expect some measure of retracement to the upside before continuing later to this area, then back up to the upside. So let's go back down to the monthly time frame. We can see that the same area, the same purple line, is where the yearly fair value gap starts. So this sell side liquidity that I was targeting from last week is where I saw price possibly getting into. So this sell side is also the yearly fair value gap. So right now, my point is that there's nothing wrong with price trading back up above the monthly opening price and above previous month's high. There's nothing wrong with price trading back up into this area or even the other block, then back down. So I'm open to literally anything happening right now. If this was a 5-minute chart, the sell opportunity that we have from this fair value gap is not yet invalidated because it's not like we need to only touch the fair value gap once. It can touch a few times before finally displacing lower. So I'm keeping an eye out on that possibility, and because of that, now going back down to the daily time frame, we can see that we've swept these sell side liquidity residing at this area, tapping into the volume imbalance. For those that don't know what a volume imbalance is, it's basically a gap that has no body of a candle laid inside of it. Let's zoom in a little bit closer. We can see that this gap, there's no body of a candlestick that's laid over it. We have the wicks, but we don't have a body. So we can see our price came down, bounced on it a few times and refused to close below it, rejecting higher. So right now, because of this reaction off of this area, and because we have now invalidated not only this fair value gap, because I looked at this fair value gap as a possible area where we could react to push lower if we were going for this sell side. So now we have violated it. We've closed above it. But this is not even my only problem. I waited for today to do the weekly outlook video because I wanted to see if we would violate this fair value gap as well, the higher one. And we can see that even though it's just a few pips, we actually did close above it. Notice there, the body of the candle is above the fair value gap. So right now, we can technically consider this fair value gap as an inversion fair value gap. And the same applies with the lower one as well, because we have officially closed above both of them. So we violated two bearish PDRAs and violated the possibility of this candle here being a breaker as well. So we've been disrespecting most bearish PDRAs, and now because of that disrespect, I'm expecting a little bit of a retracement back to the upside. So I'm expecting some measure of move to the upside, and this does not even have to be up to this point. It definitely could get here, but at the very bare minimum, we could aim for the monthly opening price and the monthly high. So let's see if we can get a zoomed out version of this. A properly labeled version of this. We can see we swept the 20 days low, displaced, disrespected this fair value gap, also now disrespected this fair value gap, and pushing higher. So at the bare minimum, I would expect price to reach the EQ line, which is the opening price or the equilibrium of the month. Then going through that, we might see the 20 days high. But the first target should be this, then after that we'll be here. Because we're showing bullish strength now. Nothing is stopping price from going lower and finally taking out the 40 days low and 60 days low. But we will see intra-week how it goes. And something we should note is that tomorrow being Wednesday, we have FOMC. I pay attention to these specific news because they are the ones that decide the interest rate. So during the FOMC meeting, the US dollar will be decided. The US as a nation would be deciding whether to adjust their interest rates or not based on certain protocols and things happening in the nation. And for those that don't know, I actually started off a background of fundamental analysis than technical analysis. So because of that background, I'm able to gauge whether certain news events are important than the other ones. And I can say that this one will be very important because if they do change the interest rates, it makes whatever currency pair that you're going to be trading more visible. And I'm going to reevaluate using the new interest rates, pairing the US dollar with any other weaker or stronger currency to find a better pair that would move without resistance. So I know that's a bit of a mouthful and probably doesn't make sense to most of you guys, but in other words, the news happening tomorrow, FOMC, is very important for the US dollar. So just pay attention to that. I'm not going to necessarily be trading into FOMC. I'll wait for FOMC to do the damage, then trade after FOMC. So now moving on, we can move on to euro dollar now, since we've seen what I'm expecting on the dollar index. On euro dollar, since I'm expecting higher prices on dollar, on euro, I'm expecting lower prices on EU and GU. But something to note quickly from the daily time frame is when I realized that there was a possibility of us reversing. It was here where we can clearly see that GBP USD took out the 60 days high. That there is the 60 days high. While on the other side, we failed to take out the 60 days high. We even failed to take out the 40 days high. But on GU, we managed to successfully take out the 60 days high, 40 days high without any resistance. So this is a major SMT divergence. Because of this SMT divergence, I said to you guys, for those that actually paid attention, that there is a possibility that this SMT might hold for lower prices on the foreign currencies. And right now we're seeing a little bit of that move to the downside, so I don't know if it's going to hold or not, but we might actually see a continuation to the downside, at least to the opening price of the month, which is somewhere here. So this is something to just keep in mind. In other words, EU is the weaker one of the two of them right now. So if I'm looking for selling opportunities, I'll be focusing on euro dollar. So going back to euro dollar, we can see that we also disrespected this fair value gap, this BC. We once respected it before Thursday came along. So we respected it once here, we respected it the next day because we still didn't close below it, and we're pushing up. We actually pushed up to the point of almost clearing these highs, which I thought was going to happen, but we didn't. And now price came back to this daily fair value gap, this CB over here, and now rejecting off of it. So I like this fair value gap for one obvious thing. I think most of you guys following me would know what it is, which is that it's a fair value gap that broke a swing low. So I like this because of this swing low that was broken. But personally, I didn't want to take it because I wanted to see a possible Tuesday high of week in this case. But I'll get to the section where that might not be the case. but I was expecting something like so. I was expecting Tuesday to form, Monday to form. We trade higher into this inversion fair value gap. I really wanted to see this inversion fair value gap get tapped. Even if it happened yesterday, I would have taken the sells better than a rejection here. But even this rejection here was not really random if we can check it out on a lower time frame. So let's go down to the hourly chart. Let's remove this. Set an alert there. The hourly time frame. The same thing that we just saw now on a daily chart, but EU being the one to be dominant. So let's do the same with GBP USD. So I think it's a bit easy to see right now what I'm actually referring to, but let's try and make it a little bit more equal so it's even easier to see. But this here is Friday's high, this high right here, and then the same applies with this high here on GBP USD. Notice how Monday opened up, went above the Sunday opening price, which is the blue line, went above the midnight opening price, which is the yellow line, took out the previous day high, which is over there, Thursday, tapping into this inefficiency, which is more visible on a 4-hour, but I'm not going to go back to the 4-hour. Tapped into this inefficiency and rejected lower. We can easily see that there's an SMT divergence there because we refused to take out this high on GBP USD. So this on GBP USD is a failure swing, while euro dollar is a turtle soup or liquidity sweep or whatever you'd like to call it. So right now, what am I expecting? Looking at the focusing on the euro dollar, as we can even see GBP USD is not the cleanest price action right now, but focusing on euro dollar because it's the weaker of the two, I would like to see a continuation to the downside without taking liquidity again, without sweeping the previous day high. So if we measured from the swing high, from the high of yesterday to the low of yesterday, we can see that the 50% of that is somewhere here, right? Which is also this is the 50%, the lighter blue line, but above the 50% we have the Sunday opening price. So if you want to ask me where would I ideally like to sell from, I would like to see if we can get above the Sunday opening price or tap the Sunday opening price to find a continuation to the downside. We may even find some sort of like breaker entry using the last bearish candle and then tap it on the dot without looking for a fair value gap of some sort and then enter, or look for a lower time frame confirmation around this area to take euro dollar to the downside. For now, I am not going to do much but wait. So let's set another alert there. So this is all I have for euro dollar. I'm expecting lower prices here, and I already mentioned that my first draw liquidity is the opening price for the month, which is here at the 1.08058. If we don't get there and make the low of the week on Wednesday and or Thursday, yeah, we could make the low of the week on Wednesday or Thursday, then reverse back into the range. Then I would like to see us push higher, take out the previous day high, which is Monday, tap into the inversion, then continue lower the rest of the week. So this is what I'm looking for in euro dollar. Moving on to the indices, we're doing something a little bit different this time and start with Russel. I don't usually cover Russel, but I'm paying special attention to it because of this structure that I saw. Russell, for those that don't know, by the way, is basically the granddaddy of all the indices, because it combines I believe 2,000 companies, 2,000 companies in the US, while the other ones like YM covers 30, Nasdaq covers 100, and ES covers 500. So Russell is technically above ES in this case. E meaning S&P 500, for those that don't know. So on Russell, on the daily chart, we actually last week, as of Thursday, finally got the displacement that we've been looking for. A displacement that closes below a swing low. And in this case, we closed below multiple swing lows. We closed below that swing low, we closed below that swing low, we closed below this swing low as well, on a daily chart, by the way. So this gave me a little bit of confidence to look for possible selling opportunities in the indices. But let's start off with Russell. So we got this swing low that got violated, making me see this as a market structure shift. And then Monday, yesterday, traded higher, way up into the fair value gap, into the CB, which I did not think was going to happen, but we tapped into the consequent encroachment on the dot, then rejected lower. So right now, what am I expecting? I'm expecting the Thursday's low residing here to be swept, the 2040.4 to be the first target, because I'm expecting a swing high to form after rejecting from this fair value gap. So if a swing high can be formed here, in other words, we would have to wait for Tuesday's candle to close. When Tuesday candle closes, I'm expecting lower prices from Wednesday and Thursday. So Wednesday, Thursday might create the low of the week as well on Russell, possibly clearing this sell side liquidity from the 21st of February. So let's see if we could find an entry going down on a lower time frame. On a 4-hour chart, we can see it's as simple and as clear as day and night. We just cleared the liquidity residing here from Thursday. We can actually see it a little bit better if we go to the hourly chart. Let's remove the line now because we don't need this anymore. We can leave the fair value gap. So here we see Friday's highs were there. We swept it and displaced down. But even on the hourly chart, I can't see an entry that I would have personally taken, because when we created this high, tapping the fair value gap once and came for one more liquidity sweep, displaced the opposite direction, confirming a market structure shift, we didn't tap back into the fair value gap. But if we tap back into this, actually we might have. This high is looking up here at the high, the H there. The high of this candle is 2066.6, while the high of this candle is 2066.6. So it's the same. These are equal highs. I thought this might actually have been an entry, an IO Fed, but that's not the case. So I would have liked to see this entry to trade lower, because it's also an entry that's above the midnight price and the Sunday opening price. But I do still find this solid because we have a breaker entry. This was the last down close candle after a liquidity sweep, displacement, market structure shift. This was the last down close candle. This was the candle that made us think we're going down, then finally ran us quickly to go to our way now finally. So this is our breaker. And notice how price came back again to it here in the PM session, ran up to the breaker and then continued lower, clearing the previous day low from there after rejecting, only after rejecting from the breaker that it clears the previous day low. So today I'm expecting the similar price action. I'm expecting some measure of run to the upside, then a continuation lower, but not something major. So if we were to measure the range of yesterday from the high to the low, we can see that the 50% is all the way here And yes, price is likely to get there, but looking at how weak the market is right now, we might not get there, and we might just tap into this fair value gap. So this is the fair value gap that broke a swing low. Again, the same entry mechanism that I've been following for some time now. So we've got a market structure shift there. Multiple swing lows were closed, and that's actually encapsulated by a fair value gap. So we might see the high of day in here, then a continuation to the downside without having to move up all the way in premium. So something to keep in mind. That's Russell. The rest of the indices follow a similar structure, so I'm just going to skim past most of them. From the hourly time frame on YM, we can see we tapped into the hourly fair value gap. I actually had an alert on this, which you can see, but I did not take the trade here. I took the trade on Nasdaq and S&P500. So went above the midnight price, went above the Sunday opening price, tapped into the hourly fair value gap, and in a staggered high resistance manner we traded lower. This is partially why I didn't want to touch YM, but I'm expecting lower prices. On the daily time frame, we have multiple swing lows that have not been swept yet, that Nasdaq has swept, like that one and that one and that one, especially this sell side liquidity. This is my main draw on liquidity because it's a low that has been swept on the Nasdaq. So speaking of the Nasdaq, let's move on to the Nasdaq daily chart. Oh, it hasn't been swept yet on the Nasdaq. I'm mistaking it for this one. So on Nasdaq, I'm expecting a swing high to form now because it's going to be a lower swing high than this previous one. So we know already that for a bearish market, we need to violate previous swing lows and create lower swing highs. But what started this was we swept a previous swing high. So for us to confirm the bearishness of this market, we would have to create a lower swing high and violate previous swing lows. So right here, as the price prints, we can see that we have now violated a previous swing low right there. We had a swing low that's been violated. So that's one. We need to now see if we could create a lower swing high. The candle prints, we push higher. We create a swing low again, a new swing low. Remember how we swept this one and now we've created this one, right? So now let's see if we'll sweep this one again and if we can create a swing high that we are looking for. And right there we actually did. So now we've created a lower swing high as we wanted, and now we are looking to see if this swing low will be violated, and it was swept eventually. So we are following the bearish pattern, the bearish trend, if you would, the bearish formula. So we're sweeping previous lows and creating swing highs lower than the previous swing high, and now we are here. I would like to see if we can create another swing high that's lower than the previous one. Of course, that means we'll have to wait for today's candle to finish printing. Then tomorrow being FOMC day, I'm expecting a displacement lower, and we might actually run for this sell side quickly without looking back. And that would mean higher dollar as well, which would align perfectly with my bearish bias. So I'm expecting lower prices on the Nasdaq, but nothing clean yet on the daily time frame. Intra week, we can see that that we took out the previous day high over there. This here is the previous day high, Friday's high in other words. And surprisingly, I didn't think we were gonna reach there, but we actually got to this fair value gap from the hourly I mean from the 4-hour time frame. So we swept the previous day high, tapping into a high time frame PDRA, and now displacing lower, disrespecting bullish PDRAs in the process. We have disrespected this fair value gap. This BC has been closed below, so we're expecting to use it as some resistance to fall even more. So I'm looking to see if we could, yeah, continue lower after sweeping liquidity like that. My drawn liquidity now becomes sell side there and sell side down there. Now, before we continue, before we continue, but let me first cover the 1-hour chart. So on the 1 hour, we've swept the previous day high. As we can see, Friday's high. This is Friday high, tapped into the 4-hour CB, rejected from it, and down pushing lower. We are still above the Sunday opening price or the new week opening gap for this week. We're still above it, so I'm expecting maybe some subtle move to the upside during London, then New York to continue and plummet lower, clearing the previous day, well, previous week low, which is Friday's low. So this is my expectation on the Nasdaq. From the 4-hour time frame, I wanted to show why I would rather trade Russell if I could, and why I prefer to trade S&P 500. It's because we have here a lot of fair value gaps, right? A lot of buy side imbalances residing here, which could possibly push price higher. In other words, if we are bearish, this is a menace to us. This is a possible resistance to price. The same goes with this, where we rejected from the first place. So these two areas are problematic when just focusing on the 4-hour time frame, because we might see some sort of reaction from them. They are high time frame PDRAs. They cannot be easily pierced through. So because of that, I expected the Nasdaq to have some measure of high resistance when going lower, which is why I decided to choose or pick the S&P 500, the E-mini S&P 500, not because it's not yet at the lows it should be, but because all this right here is just liquidity. There is no bullish fair value gap. We have sell side there, we have sell side there, and we have sell side there, obviously, and then finally there. So yes, it is behind, but we can consider it to be the sixth sister. In other words, it just needs to catch up fast. And because all these sell side liquidities residing here are basically low resistant liquidity run, we can call them LR, which is something like this, some sort of trend. Then just label it as our low resistant liquidity run. So because we have all these sell side liquidities here, I think S&P 500 will catch up faster to where Nasdaq is right now, and we might get here to this sell side before Nasdaq breaks low to its sell side there. So looking at what happened yesterday, we swept the previous day high again. It's Friday's high. I don't know why there's still an alert there. Let's delete that. So we swept the previous day high, tapped into the bearish order block, reacted from it to the tick, and now displacing lower. We have not disrespected this buy side imbalance yet on the S&P 500. We're still within it, so we could still reject higher, but I'm looking for a closure below for me to confirm the bearishness of this market. So let's set a quick alert there for when we close below. So yeah, I'm expecting a continuation to the downside, but I'd like to see this 4-hour fair value gap disrespected, turns into an inversion, then used as a measure of continuation to the downside. This is what I'm expecting on the S&P 500. and why I prefer the S&P over Nasdaq right now. So this is all I have for the indices. If you don't want to trade anything to do with the dollar this week and would prefer to focus on cross pairs, exotic pairs, or any other pair, there is one that I found interesting, and that's NZDJPY with AUDJPY. So let's look at that quickly. So we're gonna start off with the weekly chart on NZDJPY. We can see that we have this sell side, this buy side liquidity up there, which looks to be the draw on liquidity right now. It's the only thing I see price really close to that makes sense to reach to right now on NJ. And we also have this weekly fair value gap, this weekly buy side imbalance, sell side inefficiency. We traded into it the first week of March. Then last week we traded below, but we still closed above within it. And now we're here this week. I'm expecting a displacement from here because we have a small body candle last week. I'm expecting a big body candle this week. So we move from consolidation or squeezing to expansion. So I'm expecting a bigger candle this week on NZDJPY. It might be to the downside, but I'm expecting to be to the upside, and I'll show and explain why. Firstly, measuring this range from the swing low to the swing high. The 50% is right there. The only PDA rate that I see below the 50% is the bullish order block here and the fair value gap. So the bullish order block, for those that don't know, is the last down close candle before a massive push to the upside, which is here. We can see we traded into it and pushed higher. Some people use the bodies, which is here, which we also tapped into and now rejecting higher. So on the high time frame, we are in discount. We can at least expect us to trade into premium, even if we don't want to aim for that buy side liquidity or the main one that we just saw when we zoomed out up there. So we can expect at least back to the premium of this range. So let's zoom down a little bit to the daily time frame. I'm going to remove this fair value gap for now to make things cleaner. On the daily time frame, we can see that we also rejected. This is basically the fair value gap from the weekly, but we're not going to use that for now. Let's just use the bullish order block that we saw from the weekly chart. I'm expecting a push up from here because on the daily chart, we've actually now created the swing low, because I was waiting for yesterday's candle to close so I can see how price reacts from there. So yesterday's candle, being Monday, has closed and we now created a swing low. A swing low, by the way, for those that don't know, is a low that has the two lows to the right and left of it higher than it. So it creates sort of like this curve here. So this is a swing low that's confirmed. And this swing low did take out the previous swing low. Yes, I agree with that. So if we're following the trend formula, what we would like to see now, we would like to see a previous swing high swept. So I see this swing high right there. So that's the next swing high that's in my crosshairs. So we would like to see a previous swing high swept. Then we would like to see a higher swing low swept. I mean created, not swept. But we will pay attention to this. I'm looking to see if this swing high can be taken. Then I'm looking to see if Thursday's candle will confirm the new higher swing low. But that will still have 2 days for that to happen. So let's just leave that for later. Right now, we do see price Tuesday, as in today. It's only 50 minutes in the day, but Tuesday has already tapped back into that bullish order block on a daily time frame, and now seeming to reject higher. So let's see if we can find something on a lower time frame. But before we get there, I wanted to show you guys something critical to making me want to even think of buying this exotic and considering it to be cleaner than anything to do with the dollar. The first thing you need to know is the economic calendar. So this is the economic calendar with just the US dollar, the yen, New Zealand dollar, Australian dollar, and yeah, I think that's all. It's only those few currencies that I filtered by, because firstly we have the yen. This news that we have here, which actually already happened at 11:36 p.m., which explains this expansion to the upside here on NZDJPY. So we have the yen reacting because of the policy rate. I need to still check the interest rate, what they have decided, because this news that's happening here and this conference that's happening this morning before 8:30, I believe. I don't know what time exactly, but it's in the morning, I guess. I'm not sure what tentative means, but yeah, I'm expecting them, the Japanese nation currency and whatever it is, to decide what they want to see for their currency. And I'm thinking or expecting anything against the yen to push up, and I'll explain why, obviously, on the technical side of things. But besides the Japanese yen, we of course have the Australian dollar, which is the closest currency that correlates with the New Zealand dollar. So what affects the Australian dollar is possibly going to affect the New Zealand dollar, even if it's not by much. But they both move accordingly, just like how euro and pound moves accordingly. So we have that as well. So on Tuesday, today, we're expecting, well, it already happened, the press conference with the Aussie nation at 12:30, and then we also have the US dollar, which affects everything. The US dollar affects the yen, which in turn would affect our NZDJPY trade opportunity. So when the dollar pushes up, typically what happens is the yen pushes down. The yen as a currency pushes down. So they're inversely correlated, but something to just keep an eye out on during this FOMC statement. Then we obviously have the NZD news coming up tomorrow at night, 5:45 p.m. So that will definitely affect our NZDJPY trade. Then throughout the week we have US dollar news as well. So keeping this in mind, I was able to frame a trade idea with the New Zealand dollar and Australian dollar. So here we've already boiled down what we see so far with NZDJPY. We tapped into the order block after sweeping liquidity, rejecting from it. Now on a high time frame, we swept this low. So let's bring up our correlated pair. If you remember what I just said earlier, our correlated pair would now be AUDJPY, because that's the closest correlation with the NZD. So AUDJPY, we can see, starting from the weekly chart again, we can see the same fair value gap. We have closed below it, but still more or less inside of it still right now. But that's not the critical thing. The critical thing is when we go down to the daily time frame. Notice how this low right here on NJ was created on the 11th of March, and the same low is right here on the 11th of March. We swept the liquidity this side on the 15th of March, Friday, while on this side the 15th of March failed to sweep it. So this now becomes an SMT divergence. Sweeping liquidity, failure swing. So we failed to create a new swing low here, and because of that, I'm expecting this to be the cracking correlation. This is the algorithm's way of showing us that there's something wrong in the move that you're seeing right now, and expect something to happen that's also outside of the direction that you initially intended. So I'm expecting us to continue higher on AUDJPY. We did sweep the liquidity, that same buy side that we have here from the weekly time frame. Just check your chart. I'm not going to check it here. Check your charts, you'll see that we swept liquidity already. We swept this high, but we swept it by only a few pips. We swept it like here somewhere, I believe. I think liquidity was somewhere here. So we swept it here. This to me does not seem to be enough to be considered a weekly sweep in liquidity. I expect a bigger push up than a continuation, but anything can happen. I am not saying this is set to stone. I am not saying this is financial advice in any way, but just my expectations in the market, what I'm wanting to see happen, what I'm wanting to see pan out. So now that we've seen that SMT divergence, now that we've seen that there's a possible crack in correlation, we still need to wait for the confirmation, right? By the swing high taken, by the swing low created, then we can confirm that this truly was an SMT because the bullish formula is panning out perfectly on NJ. So why would I choose NJ and not AJ, even though AJ is clearly the stronger one? Well, because it just wasn't the cleaner one. This looks cleaner to me, and it would look even cleaner on a lower time frame, but this does not look tidy at all. Too many bodied candlesticks there. So yeah, it's too choppy right now, and I think that's primarily because it's already reached its objective up there, while NJ hasn't. So going down to the lower time frame, 4 hour, we can see the same thing that I said already. Liquidity was swept, rejecting from the other block now. Yes, I know the news just came out a couple minutes, hours ago, and nothing is really solidified yet. But what I would like to see is a closure above a swing high. So if I'm paying attention to any swing high, it will be this one. I would like to see if we can close above this 4 hour swing high. Why am I pointing at this one specifically? Because I see that there is a fair value gap there. This is the only PD array that I see that could possibly act as a resistance to price to push lower. So because of that, I would like to see this PD array on its own violated as well. So I'm looking for a closure above this swing high and this fair value gap. I know on an hourly time frame we've possibly gotten that already, but let's set an alert here before we go down to the 1 hour. On a 1 hour chart, let's delete this line because it's getting too much. On an hourly time frame, we can see Friday was the one that created the low of the week last week, and the low that we are looking at right now. So Friday swept the low, we traded now, opened up here technically Sunday, opened here on Sunday. This is the Sunday opening price, traded lower, pushed higher, created a high to engineer liquidity, in my opinion. And then finally the market closed here after reacting at the midnight price. This is when the market closed. The US market closed at 5 p.m. So we rejected from the midnight price, traded lower. When the news came out, which you can clearly see the wicks, all I see us doing is a sweeping liquidity, a turtle soup, if you want to call it that. So we've got a turtle soup right there. What do I typically look for after a turtle soup has happened? I look for a shift in structure, and then a fair value gap, and or a breakup. So right now, do we have the fair value gap and shift in structure? Yes, we do. Looking at this swing high right here, pull it out in time, that's a valid market structure shift when we got the closure above the swing high. So because now we've gotten the market structure shift that we wanted, and we've gotten the liquidity sweeps that we wanted, because we also swept the previous day low. It's technically previous day because it's part of Monday price action, but it doesn't show as that's the case on a lower time frame. So we got the sweep we wanted in liquidity, multiple sweeps in liquidity, and now displaced and closed above a swing high. What's the next thing we look for? If we're following the 2022 model, it will be a retracement into the fair value gap, then an expansion to the upside. If we don't look for a fair value gap, then what did I teach recently that we look for? It's basically the ICT breaker. We got the low, we got a high, got a lower low, and now we got a new higher high. Of course, it's not yet a swing high, but it's a higher high. We can wait for it to create a swing high officially by waiting for a candle to close that creates a swing high. But when that happens, what do we look for? What was the last bullish candle that made us that reeled us in only to get liquidity purged? To me, it would be this one. it would be this candle, but technically it would be this one. This was the last bullish candle. If you're looking for the actual last bullish candle, it would be this one. But if you're following a story and someone wants to ask you which one got you excited and made you think you were going to finally run up, for me it was this one, because after this one, look how we continued pushing high only to get liquidity swept later. You know, so for me it would be this one just because of that fact. But from a technical standpoint, it would be this one. But I also wouldn't choose this one. Not saying that price couldn't get there, definitely can get there, and I'll explain why. So not only, okay, this first one is encapsulated within this, not within, but a bit of it is with the fair value gap. So we could see price actually come to this first one and then expand higher. But if it doesn't, it could definitely come to the technical one, the main one. But when we look at the midnight price and the Sunday opening price, we can see that the Sunday opening price, the blue line, is basically within the two breakers that we can outline. So price can literally come back to any of them before rejecting higher. But I'm not that excited to see this happen. I'm looking for a possibility of us tapping into this fair value gap and not even bother getting to the midnight price. In other words, just give us the discount for the day, which is below the sun. There's no need to get to the Sunday opening price. We can just trade below the midnight price into this hourly fair value gap, create a lower time frame confirmation. In other words, a 5 minute chart shift in structure, a 1 minute chart, or a 3 minute chart shift in structure within this hourly fair value gap, then a continuation to the upside. Of course, as I said, a swing high is not yet formed. This hourly candle is still 55 minutes away to close, so we could still keep looking for a swing high. It could literally still keep grinding higher and higher, and it would become unrealistic for us to think of price coming down here just to push up. So wherever the swing high is created, we'll measure the swing, the range, and then look for a 50% discount from there. It might not even have to come down to this midnight price again. If that's the case, if it really expands higher, gets really excited higher, we might get something like this. Something like this, price trading higher, doesn't create a swing high, and then trades all the way here, and then finally creates the swing high. So if this is the case, then you'd have to measure from the swing low to the swing high, and you'll see that the 50% is now here and not below. It's not even at midnight price anymore. So yeah, we could see something like this, or we could create a higher swing that you can measure, a higher range that you can measure, and take it up from there. My point is to just pay attention to see how this plays out. But I'm looking at NZDJPY buying opportunities. We have so many targets. It's not like we're ever going to be late on this. Intraday, we're still waiting for this swing high to even be swept. So if you find an opportunity today, you can target this swing high. And if you're swinging or waiting for an opportunity for the week, you would literally be waiting for this swing high to be swept first for a confirmation for the remainder of the week, and then your target would be here. Your low hanging fruit would be here. Then of course, going through that, we have that buy side and that buy side. So I believe this is the start of a bigger move to the upside, but we will only time will be able to tell us whether that's the case or not. So that's all I have on the yen pairs. Let's move on to the last one, which is the CAD pairs. When I started the video, I wanted to actually start off with I wanted to actually cover the Canadian dollar with the exotics, with cross pairs. In other words, I wanted to focus on EURUSD, GBP CAD, or AUD CAD and NZD CAD. But when I looked at the NZD CAD, it's not really looking the best right now structure wise. And when I focused on the Euro CAD, it reminded me of the traumatic experience that I had to endure last week. We did not even clear the equal highs that I was looking for. I ended up closing the trade at break even after this incredible chop. So yeah, I'm not going to touch this right now because it's supposed to be cleaner and straightforward. And then when you move on to GBP CAD, we've already reached the objective, and this objective is from a high time frame. Not saying that it can't go higher, it definitely can, but I've been watching this high from last year when my horizontal lines were still dotted even. So I wanted to see our target, and we've already reached the high time frame draw. It can still push up higher, but nothing clean right now. Intraday, we could definitely find a cleaner setup, definitely. That's a possibility, and we still have buy side liquidities residing up there. So GBP CAD can definitely push up, NZDCAD can definitely push up with this low resistant liquidity run that we've been building here, but we've been building it for so long now. We have not cleared the equal highs I've been wanting, and we still have so much more liquidity to work with. And this is a weekly time frame, so yeah, it's not really giving me the best structure overall. And of course, finally AUD CAD from the weekly time frame rejected off of the fair value gap with the order block. You would expect a continuation to the upside from here, but I don't like the deep retracement it's giving. It's supposed to just, to me, the most ideal place to buy would be here. A rejection off of this, then a continuation to the upside. But of course, we do have AUD news coming out right now, where we can actually see if we go down to the hourly. Yeah, see, the hourly is just pushing lower. So of course, we get it, we see this is happening. But if I ever see a setup intra week, within the week, from an hourly time frame of some sort, between the GBP CAD and Euro CAD, I'll definitely update you guys, or even AUD CAD and NZD CAD. I'll definitely update you guys, but I don't see anything clean right now from a high time frame perspective. But definitely within the week we might find something. So because of this, we're going to go back to a major, which is USD CAD. On USD CAD weekly time frame, we don't see much happening here, but we do see somewhat of a bullish move to the upside. We have violated this sell side imbalance, buy side inefficiency. So we closed above it here and here and here, then finally price came down, tapped into it, sweeping liquidity, and now showing some measure of move to the upside. So right now I'm expecting these relative equal highs to be the drawn liquidity. There are two highs, and this is a weekly chart, so on a daily chart it should look even better. We have those highs there. So this is my drawn liquidity for this week on USD CAD, and to support this we are obviously looking for a higher dollar. We are looking for a higher dollar, and secondly we have the economic calendar right here. Today, Tuesday, we have CPI from CAD. You'll have a lot of news here on CAD today. Then tomorrow, of course, we have FOMC, which is from the dollar, then a bit of CAD. But today we have CAD news. So today is my focus when it comes to CAD pairs. I expect anything against the CAD to create the low of the week today. In other words, AUD CAD should create the low today. So tomorrow might be a better trading day, and the rest of the week might be a better trading week for Euro CAD, GBP CAD, AUD CAD, NZD CAD. And I'm not sure about USD CAD because of the dollar being in the equation, but we can also see a measure of moves to the upside from there. So if I'm expecting the low of the week to be today, where am I expecting it? Firstly, I have to evaluate what has happened. We've swept liquidity, so we've got a sweeping liquidity of the 22nd low there. We did that the first week of March, and now we have closed above a swing high right there. This swing high has been violated. The next thing I'm looking for is a continuation to the upside. Yes, we have this fair value gap that could be a problem, but personally I would like to see if price can tap back into this fair value gap here, which I'm going to set an alert on. It's the only fair value gap that I would like, the only gap I would like to trade. So let's remove this inversion that we just highlighted from the weekly time frame. I would like to see the low of the week forming here. I'm expecting CPI to push us down all the way back in here. Then the target, as I said, is these equal highs there on the dollar. So hourly time frame. From the hourly chart, actually we might get a sell-off from here, after clearing these liquidities, these are equal highs that have been here for long. We might get a sweep here, trade down. It's going to be selling above the Sunday opening price and above the midnight price, so it will be a valid intra-day sell or London sell. Then once we're here, I'm expecting New York to be the reversal and to be the low of the week. So I'm expecting the low of the week here on the USDCAD, then a continuation to that buy side. So that's what I have. That's what I'm expecting on the dollar CAD. I don't think I have anything else to cover. This has been a long video already, and for those that actually enjoyed the pain of listening to my voice, I appreciate you. I thank you for sticking to the end. I know most of you probably didn't, but I would like to wish you the best this week. So stay safe, look after your family, look after your loved ones, look after those you care for the most, because they are the only ones that truly matter. Good luck and good trading.